Peace and blessings. Keep up the lessons. You know who this is. Crypto B-Boy coming at you. Yeah, I got some news for you. And just going to run it down real quick. I got to get to work, but I was just trying to jump on some of this news if I already haven't. Actually, I haven't mentioned this stuff, but I'm saying if anybody else hasn't mentioned it, whatever, it doesn't matter, because you're getting it from me, your ball. So we're going to get in. So you ready? Let's go. Are you ready? Let's get it. Alrighty then. So let me just get in real quick and see where we at. I'm going to my mail, and then we'll get in there. All right. So that's not it. Let's pass by that. You know, China's growth. We dealt with that yesterday. We're gonna deal with this. Inside 30 billion rescue of First Republic Bank, an 11-year plan to save. And this is from I got this from Yahoo Finance. So it says an 11 bank plan to save First Republic Bank, right? Began with a brainstorming season between JPM CEO Jamie Dimon, right? We know of him, everybody knows. Fed Chair Jerome Powell, we know of him, and he's the Feds. And we have the Treasury and Treasury Secretary Janet Yellen. Okay, so they all came together. They, got on the phone and everything. What it was mentioned. So anyway, that it says here, the 30 billion rescue of First Republic Bank began with a series of phone calls, like I said, Tuesday between J.P. Morgan, Chase CEO Jamie Dimon, Federal Reserve Chair Jeremy Powell, and Treasury Secretary Janet Yellen. Right? Dimon was in Washington, according to the person familiar with the events, and he wanted to discuss some issues that concerned bank capital. The subject soon turned to the fate of the nation's 14th largest bank, which was CBB. Shares in the San Francisco lender had been sliding since last week's failure of Santa Clara-based Silicon Valley Bank, as I said, SVB, and $70 billion in financing from J.P. Morgan Chase and the Federal Reserve announced Sunday night failed to alleviate the pressures as the week began. The stock dropped 62% on Monday. The CEO of the nation's biggest bank, the Fed chair, and the Treasury Secretary started brainstorming, according to people familiar with the discussions, with input from another powerful regulator, Federal Deposit Insurance Corporation chair. Let me get this over. Chair Martin Gruenberg. Their idea, J.P. Morgan could give First Republic some deposits. So now it wasn't just First Republic. Okay, you had Citicorp, you had Bank of America, you had Wells Fargo, and so forth. So I'll skip over down it and says the next day, Dimon took this idea some of his peers at the Bank Policy Institute event. So these are the banks that I was talking about. He approached other executives, including Citibank CEO Jane Fraser, and comments and commitments from $5 billion. So they all committed to $5 billion. Woo! In uninsured deposits. Uninsured. That's something to think about. From Citicorp, right? Bank, and that was from Citicorp. Bank of America, like I said, and Wells Fargo soon followed. So J.P. Morgan also agreed to put in $5 billion. And then goes your boy, Jamie Dimon, right? So, and an infusion of $20 billion was considered enough, but these four banks decided to seek more from smaller rivals on Wednesday and Thursday. U.S. Bank Corp, Truist, PNC, State Street, and Bank of New York, Mellon, each agreed to deposit deposit of $1 billion. The last joined, according to the people familiar with the events, were Goldman Sachs, and Morgan Stanley. So all the main institutions, what we say, had joined into that and added to the deposits, right, to bail this bank out. So if they can do that, why can't they close the deficit? Why can't they do all these other things that need to be done in this country? Hmm. Well, we know it's all part of the plan, like I always say. We always know that's basically what's the deal. Okay, so what else we got for you guys? I was hold on for a second. I'm gonna go to my market briefs, right? My man, wait, let me go to the one that he was dealing with before. Um, um, hold on for a second if I can get there. Excuse me. Oh, we deal. Oh, that's what I wanted to deal with. No, that's not it. Sorry. It was yeah. Okay, so we got weekly crypto market update from George Crypto Potato. He's another person who puts out weekly um, news news statements. He sends and newsletter he sends to his subscribers, and I'm one of them. So what is he getting? He says things changed last year in the cryptocurrency industry. In the span of 7 days, the market shifted completely, with the sentiment escaping the fear zone. Let me put on my glasses because I'm getting blurry there. So what does it say? Okay, right. So first things first, in importance of where we at. I'm sorry, I skipped over something. I think. The total capitalization also soared, adding a whopping 165 billion in the process. Wow. Well, what happened? Well, let's dive in, as he says. First things first, it is important to note that BTC price is currently trading above 25K. Many of you know this, right? Reaching highs last seen 9 months ago in June 22, right? June 2022. This marks a 30% increase, and that's from that time. It's one up, and it comes on the back of major macroeconomic developments in the United States. These banking issues, right, and beyond that. Recall that Silicon Valley Bank, as what I said, like I said, the major financial institution in the U.S. with a substantial amount of VC money in deposits, went bust, and it happened so fast. We all know how fast it happened was a show, or actually giving a clue that this was strategically done, all part of the plan. But they're going to put out like they did with the pandemic, and they did other things, and even with this Ukrainian war, and they're going in there and they're sending money out, all this money to them. They use their facade and they put it over the walls of over the eyes of many people and the masses to accept and be, or even be complacent, because many people might say, "Oh yeah, I see that. I don't trust the government. I don't trust what they're doing. I don't trust this and this and like this, right? And the corruption that's there." Not saying all love, because the whole country doesn't make up that, and the whole government doesn't make up people who are nefarious in their acts and corruption. But we see what the proof is in the platter, right? From those who are doing these things that are holding back, whether it's the crypto space or crypto innovation, fintech companies being able to, innovate and continue to flourish as far as business in this country, like Ripple, and they're pushing them against the wall to where they feel they have to leave and even remove themselves from the country. It's ridiculous. So, as it says, the bank revealed a hole in its balance sheet and was unable to patch it through a share offering, scaring depositors who attempted to get the money out. In a matter of days, authorities shut it down. See, that's what I'm saying, leaving many people worried about whether they would get their deposits at all. The U.S. government, in the face of the Federal Reserve, the Treasury, and the FDIC, was quick to assemble a rescue plan, promising all depositors would be made whole. So we're not going to read the whole story. You can do that if you want. Well, actually, you don't get this. I don't know if you get this letter, but anyway. So what was the other thing that I wanted to do? I wanted to deal with. Let me see what it was. I think it was. market briefs. Okay. So we'll go to the, because I had the one that I wanted to do that I didn't go over when he was talking about all the mess in this, in our system, and how we got to look at many ways to get ourselves, um, ready and prepared for what's happening and what's coming down the pipeline. But this is what he's saying. They got this. He got the thing for St. Patty's Day. Those who are into that. The stocks, as he says, he's bringing in the stocks, which they are up, according with the Dow, 32,246. It's up 1.17%. S&P, $3,960 at $3,960. It's up 1.76%. And Nasdaq, 11,700, and that's its market value, and it is at 2.48% up. So that's the banks. I mean, that's the stocks, right? So now we have the banks being bros. What? Oh, the banks, like I said, what it says, stocks rose Thursday after a group of banks pledged that they would help First Republic. And I spoke on that. We went over that. So he went over that. So let's get into the quick bites. Where's the quick bites? Oh, that's the market sectors. We're not going to deal with that. That's dealing with the companies. Now the banks, look at First Republic. Boom. It's up 9.98%. So they saved them, and they leveled them out, right? So now they leveled, or actually a little bit up. And Goldman Sachs, 0.93%. Wells Fargo, 1.16%. So they balanced the market. That's what they did, right? They saved the market on that level from any falling down and domino effect that of the contagion that's been coming down the line, and as running in a domino effect. So they came to the rescue, and it wasn't just Republic. This had leaked into the other areas of the market, and we see that right now. He says, this is just Pratt, I think. Banks took advantage of the Fed's crisis lending programs this week. The Federal Reserve said that several financial institutions borrowed billions in short-term loans from them this week as the industry deals with a liquidity crisis. And, I would like to say that this is all part of the plan. Of course, I always say that. That's my main, saying. But we got to also take a look at the fact that, all the things that are going on are basically what we have been seeing as patterns. And so basically, I'm not surprised. The things that have been happening, they're being put in place, and it's preparation. And even when you say catalyst, there's many catalysts, and you have levels or levels that they are. They might be higher levels of a catalyst where it's like it's a major catalyst that something huge happens that goes across the global board, and then you have smaller catalysts that kind of allow other things to happen, just allow things to come into place and to puzzle up put the pieces in the puzzle, right? For you to see, oh, I understand now. This happened because this, and this is so forth, right? But look at what and yesterday I was trying to get into this, but I saw it that he put, and it's really nice. You should check him out. I'll try to put his link in the description, for that you can also go and subscribe to his market briefs. Just Pratt on he does Minority Report, and that's his YouTube channel. So check him out and check out market briefs. Try to subscribe, and maybe you can be able to get the newsletters like he sends out to your email and so forth. So what is he saying here? He says the most significant market changing events of the past 25 years. So the other one I wanted to show you guys was neat, but this is what he does. He makes like a chart, and then he allows people to vote. So he has different parts, different sides. You can vote, and this is side number 2, vote now. So but there's different parts you can vote on to what you think was the most significant market changing event, right? So you got COVID crash of 2020, Enron scandal, right? And this is in 2020. And then you got the Russian sanctions in 2022, Brexit, right? You know, any of you know of that. GameStop short squeeze, the rise of crypto, and Facebook IPO, Lehman Brothers collapse. Now that happened within the 2020 22 between 2020 and 22. So the other one that they had other issues. They had stuff that was going from 2008. It's 2008 recession, right, and crash. So and it went on down the line with a lot of different events, changing events, market changing events. You see how he puts that out, and it to me is what he's building is to me is what I just said. Patterns, people, of all part of the plan. How all these things are like, patterns. All these things are pieces of the puzzle, of the major pie of this plan that these people at the top, the elitists, the powers that be, have put into place. And like I said, I'm going to be also getting into going into the rabbit hole situation again, and trying to get you guys to see what I came up with back in the time. And then I was started to do a lot of this. So pretty much that's it. I'm gonna give you today because I got to go and get this video uploaded, and I don't have that much time before I have to get out of here. But I appreciate you guys. Don't forget to subscribe to your bro. You know what I mean? Keep on subscribing, people. Those of you who come in and you see what I'm doing here and what I'm giving as a value and more that I can bring. And the time that I have, that I'm able to spare more time to do for you, I can get into more research. I can be able to give you more even entertaining stuff, because I try to do that. And because I like it, it's fun, and I want you to have some fun, you know what I mean? So into any event, till the next time, and I'll bring some more. Click the like button when you go out if you like the video, and any comments, leave in the comment space. And of course, to let you know, everything that I've said is not from financial advice. I'm not a professional in any kind of way. You do your own due diligence, and you find and research as well right behind what I say, because only this is what I've learned from what I use, what I research in, and I'm just passing it on to you guys. So until the next time, thanks and peace, and you take care out there. I'm out.